In this video, I'm talking with legendary investor and adventure capitalist Jim Rogers, and we're discussing excessive money printing and the effect that it's having on stocks, bonds, cryptocurrencies, and of course, precious metals. Stick around. Towards the end of the video, Jim tells us why it is that he buys physical gold and silver bullion. And if you want to see more interviews like this with industry experts and thought leaders in financial markets so that you can make better investment decisions, subscribe to Goldcore TV and hit the notification bell now. Now, recently you have written 3 best-selling books that have been published in Japan. And the title of one of those books is A Warning to Japan. And you talk about the changes in the demographics in Japan and the implications that's going to have for society and the economy going forward. If you were to write a similar book, A Warning to the US or A Warning to the EU, what would you be warning them about at this moment in time?
Well, the Japanese books were written because, Japan's population has been declining for 11 years now, and the debt has been skyrocketing. So, it's pretty simple. You add the debt and you subtract the people, there's not going to be a Japan in 50 years. And this is not some opinion by some foreigner. The Japanese certainly don't like foreigners. This is just simple arithmetic. I don't think in the U.S. we have this. We certainly have a skyrocketing debt problem. The U.S. is the largest debtor nation in the history of the world, but we don't have a declining population. If nothing else, we have still having babies and we have immigration, which the Japanese don't. Likewise with Europe, the debt is going through the roof in Europe. Some of those countries are completely bankrupt, just like the U.S. and Japan. But at least you have more people. Yes, a lot of it's immigration, but immigration is usually good for a country, good for a society, and certainly means you don't have declining population. So it would mainly be, I would have to warn about the debt, because throughout history, Dave, this is not a good time to be young. This is a great time to be old. All the old people are going to get the advantages of all this staggering amounts of money printing and spending, but they don't have to pay for it. I got 2 teenage daughters. Oh, those poor girls. They will have to pay for staggering amounts of debt someday. So it's a little different in, quote, the developed world right now than in Japan.
And we've seen now over the last year in the US and in the EU, massive increases in those debts. They were large beforehand, but it has gone astronomical now over the last year. Typically, particularly for the US, they funded a lot of that debt selling bonds to China. We now have a situation where we've got low interest rates, weakening dollar. Can they continue to fund, or how do they continue to fund their debt?
Well, if you ask the central bank in Washington, D.C., they'll say, don't worry, there are not going to be any economic problems anymore, and we've got everything under control. Now, I know that's totally false. I know that history is very clear that that's totally false, but if you believe them, the head of the Treasury used to be head of the central bank. She's got 2 Ivy League degrees. I know she's totally wrong, but they will tell you, don't have to worry. I will tell you that every country in history that's gotten itself into this kind of situation has had a crisis or a semi-crisis and gone into decline. And unfortunately, that's going to happen to the U.S. Now, the one thing that might be a little bit different is whenever there's a problem, people look for whatever theory is lying around. Mr. Marx had a great theory that a lot of people bought into for a long time. Wonderful theory, great theory. We now know it didn't work. Nobody wants to be a Marxist anymore. But at the moment, there's a theory lying around called MMT, more money today, or whatever they call it. And that the British are doing it. They're not announcing it. Some countries are basically just printing up the money and hoping this is all going to go away, because the theory says, don't worry, just like Mr. Marx. So we'll probably have a lot more money printing. This is not good for, as I say, it's good to be old. It's not good to be young.
And obviously, there's political reasons as well for continuing the MMT, the more money today, the continuous printing. That obviously has implications for various different asset markets. Would you agree that what we've seen in the stock market, particularly again in the US, the run up in the stock market and the Dow, for example, over 30,000, is as a result more of the money printing than it is of the fundamental performance of those companies?
It's almost purely the money printing. The Japanese stock market is the highest it's been in 31 years because the head of the Bank of Japan goes to work every day, he says he will print unlimited, that's his word, unlimited amounts of money. And he's buying ETFs and stocks and bonds. Well, I own Japanese ETFs. I mean, for goodness sakes, if he's got more money than I do, Dave, he's going to buy Japanese ETFs. I am too. I mean, it's insane. Japan, read my books, you'll see that Japan's not going to be there in 50 years. But in the meantime, the Japanese stock market may go back to an all-time high, which it has not done since 1990. It has that much money being printed all over the world.
And you're a fantastic observer of markets and trends. Where do you see this then going over the next couple of years?
Well, I can see bubbles starting to develop. It's not the bond market all over the world is a bubble. We've never had interest rates this low in the history of the world. So bonds have never been this high, and bonds are certainly a bubble. Property in some cities sold, and in some cities is becoming a bubble. Stocks, the American average is making all-time highs, but there's still lots of stocks that are not. So we're developing a bubble, but it's not there yet. I mean, I've seen this movie before, Dave. Lots of young people are coming into the market. New people are coming into the market. They're talking about how easy it is. They're spreading all these stories. It's not my first rodeo. I know how this is going to end, but I don't see it now. I'm not shorting at this stage because this could go on for a while. Probably will, because there's so much money being printed and spent all over the world. But there are enough signs that this is becoming to an end. I mentioned some of the things that you see all the time. SPACs, these things where special interest companies that people just raise money with the idea they're going to put, that has often happened at the end of a bull market, but it's not. Maybe the bull market is ending today, but it doesn't look like to me yet. I just see the signs developing. So it'll probably go on for a while. They got a lot of money to print.
So talk to me then about precious metals, because obviously if we are seeing the inflation in asset classes like the stocks and the bonds and property as a result of this money printing, precious metals, gold in particular, has historically benefited in situations like this. Maybe you might actually start by telling me about the first time that you actually got interested in gold and purchased gold.
First time I bought gold, it was illegal. It was 1971. It was illegal for America. I didn't buy a lot. I went to Swiss Bank Corporation in Zurich Airport, bought a few slivers of gold, hid them in my closet. Fortunately, it became illegal not too long after, but I've been owning gold. I've never sold any gold. I give gold away sometimes to friends, but I've never sold any. Everybody should own some gold and silver as an insurance policy, if nothing else. And if you're really good at it, which I'm not, but if you are, you can buy and and get the timing right. You can make a fortune in gold and silver. But everybody should own some. Now, the academics and the politicians, they will say, gold, forget gold. Gold is absurd. Well, I'm an old peasant, and all of us old peasants know we want some gold over there in the closet or under the bed if and when things go wrong, despite what the academics, despite what the politicians say. So everybody should own some gold. You have life insurance, you hope you never need it. You have health insurance, you hope you never need it. but you better have some gold and silver and hope you never need it.
And you've spoken about the fact that you bought gold back in 2019. I don't know whether you're buying it now at the moment, but in 2019, was that because it looked good value relative to historical prices, or was that kind of prescient in terms of what you saw developing in global economies?
I had stopped buying in 2010 because it got so hot, but by 2019, the correction had been going on for 8 or 9 years, and corrections don't last forever. And for whatever reason, I thought I sensed that it was time for the correction to be coming to an end, so I started buying gold and silver. I'm not buying either at the, certainly not selling, but I plan to buy more of both, especially silver. Silver's down 45% from its all-time high. Gold is near its all-time high. So at least on a historic basis, silver is cheaper right now. And I know I'll be buying some more of both sometimes during the correction. I don't know when. I guess I should watch gold for find out when to buy.
And do you favor physical gold and silver, or are you do you also invest via ETFs?
I have some of both.
And what do you see then as the benefit of physical over the electronic form?
Well, as I said before, as an insurance policy, if nothing else, if the whole world comes to an end, you better have it over in the closet, because electricity may close down, vaults may, who knows what may happen. Internet may close down if you have a very serious disaster, which has happened, whether it's war or who knows what. So I have some of both. You get a lot more leverage, obviously, if you buy listed or traded futures or ETFs, whatever you want to buy, gold mines. But I have some in the closet in case.
And as we kind of touch on digital currencies loosely there, cryptocurrencies, is it something that you have been following? Are you a fan of? Do you have an interest in? Or what's your opinion on Bitcoin and the stellar run-up that we have seen of late?
Well, I wish I owned Bitcoin. I've never bought or sold any of it. I know people who have and are making a lot of money. I also know, Dave, that there were hundreds of cryptocurrencies. Many of them have already disappeared and gone to zero. We all read about Bitcoin. You don't read about all the ones that have already disappeared and gone away. Normally, if Bitcoin becomes a viable currency, history would indicate that governments will then put it out of business because governments do not want to lose the monopoly and the control. Now, that is what's happened throughout history. All money is going to be on the computer. In China, it already is. You cannot take a taxi in China with money. You have to have computer money. Like you can't buy an ice cream. You can't do anything. So it's already happening. Every country is working on computer money, so it will be eventually, but it's going to be their money. The crypto guys all say, well, we're smarter than the government. And of course they are. Everybody's smarter than the government. But the government's got the guns. I mean, the government's got the tanks. And if the government says that's illegal, most people will not use it anymore. And that's what governments have done throughout history.
And then obviously, as we talk about or touch on control of the US dollar there, we've seen a weakening of the dollar. How do you see the dollar performing going forward over the next couple of years?
I own a lot of US dollars. It is in a correction, has been for a few months, but which I think is a normal correction. It was very strong for a while. The reason I own them, I've already explained, the US is the largest debtor nation in world history. But during turmoil, people look for a safe haven. And there are not many safe havens. People will not buy sterling. They won't buy euro. They're not going to buy the euros as a safe haven probably at that point. So the US dollar is going to get overpriced. It could turn into a bubble of its own, depending on how bad the world turmoil is. At which point I will be selling my US dollars because Dave, already there are many countries looking for a competitor to the US dollar, both for political reasons, because the US dollar, if they get angry at you, they put you on sanctions. Well, that's not the way international neutral medium of exchange is supposed to work. It's supposed to be neutral. But Washington doesn't play by those rules, which many people don't like. And for economic reasons, the US is the largest debtor nation in the history of the world. So the world is looking for a competitor, and throughout history, no international currency has lasted more than 100, 150 years. And I'm afraid the US, you can look over the hill and you can see that the US dollar is coming to an end too. Not this week, not this quarter, but it's happening.
And you're based in Singapore, so you have a keen eye on developments in the East. Do you see, what currency do you see as threatening the dollar genuinely for its position as a reserve currency? Is that the Chinese yuan?
Well, as I look around, I don't see a viable currency for the US dollar at the moment. They're certainly not the euro, not the Japanese yen. I mean, all the ones we can name. The only conceivable one is the Chinese currency. But I mean, hey, it's not even convertible right now. It's hard to have an international medium of exchange and, trading currency if you can't even buy and sell it. Now, the Chinese have been opening up the renminbi since 2005. I mean, I'd do it this afternoon. I'm not China. They don't have to listen to me. But that's the only one I can see on the horizon which might eventually compete with or even replace the US dollar.
Now, I can't leave this interview without asking the author of Hot Commodities about the broader commodities market. It's a book that has that I've read cover to cover a couple of times. When it comes to the broader commodities market, obviously we touched on precious metals, but we're seeing moves higher in broader commodities markets. Is that something that continues, in your opinion, going forward from here? Are we in another strong bull market for commodities?
Well, as I look around, the cheapest asset class, I mean, bonds are in a bubble. It never in history have bonds been this expensive. Stocks are beginning to form bubbles, property in some countries. I mean, silver's down 45% from its all-time high. Sugar's down 70 or 80% from its all-time high. Agriculture has been a disaster for decades. If you look around the world, oil has been rallying strongly in the last year, but it's still down over 50% from its all-time high. So the cheapest asset class I see at the moment are commodities, and money printing is going on like crazy. So I would suspect that commodities will continue going up for a while. I mean, you look at some of the fundamentals, the world is apparently moving towards electric cars. Well, an electric car uses something like 4 or 5 times as much copper as a regular car. So if we're all going to be driving electric cars, somebody's got to come up with a lot more copper. And that's true of lots of metals going forward, but not just, everything. Agriculture, energy, everything.
And before we close, actually, if I can ask you one final question, and that is, if you were to give one piece of advice to the average investor out there to help them prepare for what's coming over the coming years, what would that be in relation to managing their portfolios?
You've got to watch gold coin. You've got to find out what's going on in the world, because the main history shows that, well, first of all, history shows that most people don't learn the lessons of history. But history shows that if you learn the lessons of history, you will see that many countries are in serious trouble, and the world is facing some big problems down the road. Once you understand what's happening, you'll become knowledgeable. And once you're knowledgeable, you'll become prepared. And if you're prepared, you're going to come through. A lot of people in the 30s, Dave, made a lot of money, even though most people disappeared and got destroyed. So if you're prepared and knowledgeable, you'll come through this with no problem.
Jim
Not with no
Rogers.
problem, but not with no problem. But you will come through it, I should say.
Jim Rogers, thank you for joining us on Goldcore TV today.
My pleasure, Dave. Let's do it again sometime.
If you enjoyed this video, then check out this interview that I did with Louis Gav of GavCal Research, where we talk about how to prepare for the coming crash. Watch that video next. And if you want to see more interviews with industry experts and thought leaders in financial markets so that you can make better investment decisions, subscribe to Goldcore TV and click the notification bell now.